Welcome back to Explain the Charts. Today, April 15th, 2025, we're dissecting USDCHF, combining news analysis with technical chart data. Recent Google searches highlight the Swiss franc's safe haven appeal due to ongoing trade tensions and U.S. economic policy uncertainty. The Swiss franc is at 15-year highs, supported by wavering risk appetite and the U.S. dollar faltering, according to recent Market Pulse reports. Trump's tariff policies and their potential effects are still shaking investor confidence. Looking at the daily chart, we see a downtrend continuing from late 2024 into early 2025. The recent candles show the price struggling to maintain any upward momentum. The safe haven demand narrative from the news aligns with the chart's bearish trend, suggesting the franc is benefiting from global economic anxieties. Now, let's drill down to the 1-hour chart for a more granular view. Zooming into the last few days, we can see the price action around April 10th and 11th showed significant volatility. This volatile activity is correlated to the tariff announcements, which likely intensified the CHF's safe haven allure, impacting the USDCHF negatively. Switching to the 15-minute chart, we see intraday volatility and indecision. The pair is struggling to establish a clear direction with short bursts of upward and downward movement, typical of a market reacting to short-term news flows. We can see the choppy action continued through the 11th, showing just how hard it is to make sense of this pair. Back to the daily chart, key price levels to watch are previous lows around 0.8100 as potential support, a level not seen since the Greek debt crisis. On the upside, resistance can be seen around 0.8400 and 0.8600, previous consolidation zones. A break below 0.8100 could trigger further downside towards levels last seen in 2011, driven by sustained safe haven demand and a weak dollar. Unbiased, I'd estimate a 60% chance of the price testing the 0.8100 level, reinforced by worsening trade tensions or further dollar weakness. I'd assign a 30% chance to a bounce back towards 0.8400 if risk sentiment improves and trade tensions ease. The remaining 10% goes to a major reversal, which would require a significant shift in global economic outlook and SNB policy, which seems unlikely in the short term. Keep an eye on upcoming economic data releases from both the US and Switzerland, as well as any statements from the SNB and the Federal Reserve. Any escalation in trade tensions or signs of a global recession will likely strengthen the Swiss franc's safe haven appeal, pushing USDCHF lower. Conversely, positive developments in trade negotiations or a stronger-than-expected U.S. economic recovery could provide some relief for the dollar and push the pair higher.